And we are live. What's up, everybody? Let's dive into it. So today and over the weekend, Bitcoin has been showing some price aggression, okay? Almost eclipsing that all-time high that it put in midway or on Friday. Almost eclipsed that today, touching a high of just under $70,000. But here's the thing. When it comes to Bitcoin, there's really three types of people. You have the accumulators, you have the one and dones, and you have the traders. Now the accumulators, they're just going to buy Bitcoin along its price journey. If Bitcoin's low, they're going to buy. If Bitcoin's high, they're going to buy. They're just going to continue to accumulate, all right? The one and dones, now I'd say the one and dones are most people. They basically just gonna buy Bitcoin to try and get in at maybe on a dip or maybe on a low point or maybe even at all-time high levels and just basically just hold it, right? So one and done, they're just gonna buy and they're not gonna intend to buy again. That's not in their plan. That's not in their process. Just gonna probably throw in a couple $100 here and there into Bitcoin one time and one time only. And then you got the traders who are taking short-term positions. Those are the types that will get in at optimum levels and get out at good price points, right? They're good traders. Now, when it comes to me, I am an accumulator of Bitcoin. So I'm buying along its price journey through the cycles and as well as a trader, okay? But I want to help out those three types of people, the one and dones, the accumulators, as well as the traders. In terms of accumulation, if you're an accumulator of Bitcoin, well, you should have already bought Bitcoin before even jumping on this live stream with me, because regardless of what price is doing, you're buying, okay? You're completely detached from price movements, fluctuations, and you're just buying along the price journey. In a strong cycle, in a down cycle, it doesn't matter. You're just accumulating without fail, regardless of what is happening on a fundamental front or what's happening on a technical front. Now, the one and dones, I wouldn't recommend anyone be a one and done, but a lot of people have this view that, you know, we're still in 2010 and you could just chuck a little bit into Bitcoin and then make a ton if you just hold it. But what normally happens is the one and dones, they have a fantastic way of buying at the top and then an amazing way of selling at the bottom, okay? Now, if I was a one and done, what would I do given where price is right now? Well, we have that halving event coming up in about 30 days, midway through April 16th. And as you guys know, I've been predicting we are going to see a price drop, and that's going to be a real liquidation type of event. It's going to take out loads of short-term positions. It's going to catch a lot of people off guard. Now, that event is going to be temporary, but it's going to act as a point to get in, especially for the one and dones. And where would I be looking? I'd be looking at the $57,000 mark, right? 57.2 to be exact. So if I was a one and done, 57,200 is where I'd be looking to put my little bit of capital, and then that's it, you're one and done. For the traders, as a matter of fact, the trading position to go long, I'd either wait for a break above the $70,000 mark. As soon as we get a close above 70,000, stop loss right below the 68.5 level, 68,500, and then let it run to 72. That's what I'd do if I was gonna take the next trading position on this. Wait for the break above that all-time high level, candle close above that, stop loss at a strategic level, right? That's what I would do if I was an accumulator. That's what I would do if I was a one and done and as a trader. But as you guys know, I'm an accumulator and a trader, and I'm definitely not a one and done when it comes to Bitcoin, but a lot of people are. A lot of people are because they've heard stories that people have jumped in back in 2010, 2011 with a tiny amount of capital. The thing is, we're in a different era of Bitcoin now. We're in a whole different era of cryptocurrency. This is a different stage. This is a different generation. So the approach has to be very different to what it was back in 2010. Okay, either gonna be an accumulator or you're gonna be a trader. Those are the two best ways to make some very good profits, money in Bitcoin. Now check this out. This is an interview from 2017 from Larry Fink. Okay, if you don't know who Larry Fink is, he runs the biggest asset management company in the world. We're talking they have $10 trillion under management. That's a massive amount, right? $10 trillion is absolutely insane. Okay, so largest asset manager. So they have different investment products and vehicles, and they have a lot of people flood cash into those vehicles, or they just take cash and go and invest it into things like infrastructure or property, and that's how they run their business. So it's a business that manages a lot of money. So this is a very powerful man, and when Larry Fink talks, money listens. All right, that's the key thing. Money listens when he talks. So let's see what he had to say in 2017 about cryptocurrency.
Either trade in digital assets or digital virtual currencies if you prefer, or to create a product for your clients.
We're not hearing any demand from any of our clients other than maybe some speculative stuff. We're being asked that question, but it's more of like a venture capital type of interchange. But we're not hearing clients saying we want to use this as an asset class. No,
It's not an institutional thing.
it's far from that. As I said, it's much more of a speculative platform for Asia, and it's heavily used for money laundering.
All right, so you heard it here, heard it there. Back in 2017, he was basically like, look, there is no demand for cryptocurrency within our institutions, and it's basically used for money laundering. There's no other purpose for it. But he did come out with a revised view on Bitcoin, and this was just this week gone, so it's just a couple days ago. So this is from 2024. That one was from 2017. Let's see what he has to say this time around. Very different story.
Then there's a lot of merit to it. There's a lot of opportunity. It is a great store, and this is where you can debate. Is it a good store?
Do you know how it's made? A bunch of computers figure out.
But the issue is if people believe that it can be an asset that can be cross-border. And let's be clear, if you're in a country where you're fearful of your government, and maybe this is one of the reasons why China has banned it. If you're in a government where if you're in a country where you're fearful of your future, fearful of your government, or you're frightened that your government is devaluing its currency by too much deficits.
Like us.
I'm not going to go there.
The little elephant in the room.
Yeah. You could say this is a great potential long-term store.
Tone is very different here. Here is straight off the jump giving pros for Bitcoin. Okay, now he's fumbling the ball a little bit here, and he's obviously being very, very careful with what he's trying to say. But essentially, he's talking about the US debt crisis that's going on right now, and that's a massive, massive thing, because that debt crisis that can result in a lack of confidence for US assets. That lack of confidence could result in a very significant devaluation of the currency, right? And if the currency devalues, then your purchasing power is a lot less than what it was beforehand. And nobody wants that, right? Nobody wants reduced purchasing power. Everyone wants an increased purchasing power, makes their money go further. But the problem with a debt crisis like this is you can get yourself into a vicious spiral where If you have a lack of confidence, you got to increase interest rates. That increased interest rates then could turn into a situation where you struggle to attract buyers for assets. That could further reduce confidence and then slow down economic growth and all these types of things. Now, he's not going to say all of that, but that is a reality of a situation like that, spiraling debt. Now, all of that basically weakens the currency, right? It weakens the US dollar. Whereas on the other hand, you have Bitcoin, which has insulation to that. Now, because you have that insulation effect, it is seen as a store of value. It's seen as an alternative to holding dollars. And you've got one of the most powerful men in the country when it comes to flow of funds basically saying that. So that is a big deal. Okay, that's a big deal. And he's basically putting that on the map for a lot of people with a lot of capital. They're going to see that, turn to Bitcoin. They don't have any exposure to Bitcoin as it currently stands. But you've got the guy who runs a $10 trillion asset management company putting his stamp of approval on Bitcoin. You can see there's a massive sentiment change, okay? And you can see how you can get a ton more dollars flowing the way of Bitcoin. That's exactly what will happen, okay?
A value, and as I said, it's like digital gold, and I believe,
But you still can't buy a slice of pizza with it.
I mean, this guy saying you can't buy a slice of pizza with Bitcoin. Like, that was his reply to what Larry Fink is saying, which is mad, because Bitcoin, he's saying, look, you basically can't buy anything with Bitcoin. He's saying it has no utility. That's not correct, because there's tons of retailers, there's tons of places where you can actually use Bitcoin for purchasing. So we know that gambling sites, for example, gambling sites, casinos, you can use Bitcoin. Right? Yeah, that's a niche space in the world, but you can. There are sports teams. So you got Miami Dolphins, for example. You can buy tickets there. You have the Mavericks. You can buy tickets there as well. You can buy using Shopify as well. Some Shopify sites accept cryptocurrency, and the list goes on. There's a long list. But the key thing here is that list is growing. There's not been any year where the number of retailers hasn't increased. The number of places where you can spend Bitcoin hasn't increased from year to year. So 2024 versus 2025, that number of places where you can actually use your crypto to buy stuff, that's just going to continue to grow and grow and grow. But we're still at the early stage of that, right? He's talking about pizza. You can't buy pizza. I mean, you buy Ferraris with Bitcoin if you want.
Isn't that kind of odd that we're...
but you can't buy a price of pizza with palladium or gold.
No, but there you can do stuff with them. I can get stuff with... I mean, people use gold for stuff, right?
But you can buy and sell your Bitcoin, no different than gold. So it is very...
But gold is put in, like...
Jewelry.
And iPhones, I think there's in some electronics, there's gold.
Or silver.
But you see what I'm saying? There are practical uses. Bitcoin, it's literally a ledger.
It is a ledger, but it's an international ledger. It's cross-border. It's bigger than any government.
I agree with you.
Now, there was a lot of reference to gold here. I think saying it's the digital gold, and yeah, he's absolutely right. But as I said, he did fumble the ball a little bit. He wasn't that convincing. But he did put it on the map, right? You're going to have a lot of institutions, you're going to have a lot of asset managers, you're going to have a lot of individual investors, etc., who are listening to every single word that this man had to say. And he is putting Bitcoin on the map in a big way here. But what he should have said when it comes to gold is he should have said that, yes, it is a digital store of value. It is the next iteration in terms of how we store our wealth. Because when it comes to the dollar, you can print more dollars. And in that way, you are devaluing the dollar, you're increasing it, you're creating inflation when you do that. He should have said, when it comes to gold, you can mine more gold, right? So with the traditional stores of value that we all know and we're used to, you can increase that supply. But when it comes to Bitcoin, there is a finite supply of only 21 million Bitcoins, and it can't get any more than that. Because you have that cap in terms of supply, it creates a very, very differentiated asset. Okay, and this is why it is the iteration, it is the next generation of storing value in dollars and storing value in gold, because of that dynamic that's built into the Bitcoin mechanics. Now, he should have said that, he didn't say that, but I've said it for him. Now, there are a couple of things that he most definitely missed off when it comes to talking about Bitcoin with his interviewer, that I'm sure his listeners would have wanted to hear, because it's very, very useful. And one of those being, we are in a time, and we've never been in this time before, where we have a whole new asset class in Bitcoin. This didn't exist before 2024. Okay, before 2024, you had some individual investors and traders, short-term participants. You had, some VC funds in there who were, adding on Bitcoin. You had a few large individual buyers. This time, 2024, is very different, because we have access to the spot ETF, which basically means you can go and buy Bitcoin on the stock market. It's as simple as that, through ETFs run by companies like BlackRock. Now, there are a couple other companies that run ETFs, there's like 10 of them, but really and truly the MVP is BlackRock through their IBIT ETF. No one really talks about any of the others, because IBIT gets all the attention, it gets the majority of the money flows, and it's going to continue to do so. Why? Because it is underpinned by the biggest asset manager in the world, BlackRock, with $10 trillion under management. So they have a vast amount of clients with vast amounts of money to allocate to this new ETF. And that's exactly what's been happening. The money flows into ETF have been absolutely insane. And the clients of BlackRock, they're loving it, because it's their way of getting access to Bitcoin in a way that they've never been able to do so before. Very easy in familiar settings, but just go and click a few buttons or speak to a few advisors on the phone, and they can get a portion of their money transferred and put and locked away into this new ETF, right? So it's all done in a framework that's very, very familiar to them, and that is key. Now, here's the thing. This spot ETF has opened up a whole new wealth channel. And to put it into perspective, it's the boomers and the institutions that have been flooding money into the ETF in ways that we've never had before. Okay, we've never had inflows into Bitcoin from these two participants. They've been standing on the sidelines for the last 10 years plus. Now is their time to participate, and they're participating in a big way. Just to put it into context, look, the boomers, they have $46 trillion worth of liquid wealth. All of that money, okay, wasn't flowing into Bitcoin. I should say none of that money was flowing into Bitcoin. Now it's different. Now we're getting portions of that flowing into Bitcoin, and we're increasing, and we're seeing more and more money inflows, right? If you look at that chart, week just gone, the ETFs added 33,000 Bitcoins, okay? That's hundreds of millions of dollars flowing into Bitcoin. And you can see that they've been adding massive amounts week on week on week. As a matter of fact, to put it into context, right, the Bitcoin ETFs, they own 5% of the entire supply of Bitcoin. 5%, or more than that, even more, because they're adding. It was 5% like a couple of weeks back. So we're getting towards 6%. And that number is going to continue to climb and surpass 10% with time. And the reason is this. You've got boomers that are sitting on a lot of liquid cash, and you've got institutions that are buying this ETF, and they funneled in billions and billions so far in the last 2 months since it was launched in January, right? But they haven't allocated all their capital. This is the thing. It's not like you're going to get a call from your wealth advisor from BlackRock saying, hey, we got this new spot ETF. Listen, it's a good chance for you to allocate a portion of your capital into Bitcoin. It's got good long-term potential. It's an inflation hedge. Look how it's been performing, the best performing asset class over the last decade. So yes, we think it's a good idea for you to allocate a portion of your of your income, of your wealth, of your estate, whatever the case may be. And they're gonna be like, yeah, you know what, that's a good idea. But they're not gonna, they wouldn't have transferred their entire position. They would have just transferred an amount with the intention of buying more. This is the thing. So we've seen billions and billions of inflows, but that billions and billions of inflows is going to have a recurring element to it as people add Bitcoin to their pension portfolios, to the long-term investment plans, etc. So that money is going to continue to flow in. That is why it is powerful. That is why we're in a whole different time and a space than we were pre-2024 as it relates to Bitcoin. So you're going to continue to get those money flows. And as you continue to get those money flows, what's happening is you have a powerful demand shock when it comes to Bitcoin. And that is the key thing. We are in a demand explosion. To put that into perspective, in fact, I'll save that. All right, so new asset class, creating unprecedented demand, and that's the key. And it's not only just through the ETF, all right? We know we have a massive buyer who's bought like 3 billion of Bitcoin in recent times. And speculation is that is a government. And that government is likely to be somewhere from the Emirates, or whether it's Saudi, whether it's Qatar. And we're going to get a government just like El Salvador has, because they've been killing it, right? They're up like 73 million on their Bitcoin purchases. That isn't going to go unnoticed. That's not something that happens and then all other governments just stay quiet and stay on the sidelines and then turn a blind eye to it. They look at that and they think, I want to get a piece of that. How's this small impoverished nation over there, El Salvador, somewhere in Central America, we've never even heard of them until this year, making 73 million on their Bitcoin purchases? Let's round up the troops. Let's talk about this. And let's see how we can participate and get involved. Okay, so you're going to have another big investor class, and that's going to be governments as well. They're very new to Bitcoin. Not only is there a demand explosion, there's also a supply side crisis when it comes to Bitcoin as well. Now, those two dynamics create a very powerful upside situation, which is why Bitcoin is going to surpass $100,000 this year. First of all, we know that Bitcoin has a limited supply of 21 million Bitcoins in circulation. Yes. And it will never increase above that. And that alone just separates Bitcoin. But so if it doesn't get any more crazier than that, there's 25% of Bitcoins lost. 25% of the 21 million is lost forever. That is not going to re-enter into circulation. So you have got a real supply side situation going on here. 21 million Bitcoins lost forever. You also know that the ETFs, they're stacking up on Bitcoins. they've currently got about 6% of circulating supply. That's going to increase to 10%. You've now got people taking a view that Bitcoin is the digital gold. So the way that people interact, the way that people buy, their whole process, their whole reason for getting in is very different to how it's ever been before. So you're going to see Bitcoin being added to more and more retirement style portfolios, more long-term investment plans that alone strip supply from the market. That takes off the market. Okay. And just backtracking to the spot ETFs to put it into context how crazy it is. IBIT alone has been buying 3 to 4 times the daily new supply of Bitcoin. So every day, on average, there's like 900 new Bitcoins that come into circulation. BlackRock alone have been consuming 3 to 4 times that 900 amount themselves, let alone the rest of the market, right? So not only are they buying every single Bitcoin that comes into market every day, they're actually eating away at the existing circulating supply in the market. It's crazy. It is crazy what's going on right now. So you need to be tapped in to what is going on. That is very, very advisable for you to definitely not turn a blind eye, because a lot of people are still turning a blind eye to what's going on in crypto right now. And a lot of people are just paying attention to, oh, it's at an all-time high. Oh, the price is at an all-time high. Oh, I'm just going to wait for it to crash, and yeah, I'll look at it then. Wrong move, okay? And that's the collective view. And we all know the collective view is always wrong. That's the collective view amongst retail. There's a reason why institutions have been stockpiling and stacking, throwing heaps and heaps of billions and billions of dollars through this spot ETF. They're not doing it for no reason, okay? They're doing it for this very reason I'm telling you right now, is that there is a humongous supply side crisis, and you need to do yourself a favor and get on board, okay? Through an accumulation plan, as I mentioned in the beginning. So this is crazy. Now, Larry Fink should have also said we have a massive halving event coming up, and that halving event is coming up in 30 days time, next month in April 16th. And the reason why that halving event is so powerful is because the new supply, the new circulating supply of Bitcoins is going to be cut in half. So instead of there being 900 per day, that's going to drop to 450. Okay. What that means is that, remember, we have a supply side crisis that just adds to that. That is a beneficiary of the long-term view of Bitcoin continuing to rise. We have less supply, more and more buyers. So that supply demand shock is just going to be even more exaggerated in the halving event taking place next month. Now, the crazy thing about the halving events is that we have seen an absolute explosion in crypto price after the halving event. There have been 3 previous halving events. The first one's down here, back in 2012. The second one, 2016. Third, 2020. Fourth, obviously, 2024. We're in a different space, we're in a different time to how we've ever been in the previous halving events. We didn't have the institutional money flows, we didn't have the money flows from the boomers, and we didn't have the structure, the support, the utility, the adoption around Bitcoin and cryptocurrency like we've ever had before in 2024. After 18 months after every halving event, on average, the price has quadrupled. That is insane. Now, is the expectation that the price quadruples? Doesn't really matter. But the expectation is the price moves a lot. A lot. So currently at 69,000, that is cheap considering everything that is going on right now. Okay. The market cap of Bitcoin is 1.3 trillion. It's the 8th largest asset in the world right now. And it's soon to overtake who's above it? Silver, just above. Gold has a market cap of 14 trillion. Bitcoin will continue to take market share from gold. From everything I've told you in this video, Bitcoin will continue to take market share from gold. There will continue to be a leakage from gold and a flow into Bitcoin, because there are dynamics seen in Bitcoin that do not exist in any other asset class. So that is one of the reasons why you're going to continue to see an increase, continue to see the value of Bitcoin move higher. But the halving events are crazy situations, because after a little bit of volatility, after a little bit of selling pressure, a couple of liquidation events, you do get massive moves higher. And that is the expectation in this halving event that is taking place next month. So that's why an accumulation plan is very, very important, because you want to be in the game. You don't want to be out of the game. You want to continue to build and accumulate your position. And also, if you're a trader as well, you want to understand the situation, what's going on, so you can get in at optimal prices and then make a lot of money as price really does its thing. But you can see the evolution of price through the halving events. Okay, you can see from one halving event to the other how price has moved, and it's almost like an identical movement, because the Bitcoin cycles have been very predictable, they have been very, very stable, and they'll continue to mirror and map each other, obviously, but just in different velocities and different magnitudes of moves. But there's still tons and tons of upside when it comes to Bitcoin. All right, guys, that is the live stream for today. I'll be back tomorrow. Drop me down some comments, and I'll catch you guys on the next one.